Okay, a very good afternoon here on the 3rd of July 2020. It's Rishi Patel, co-founder, Master the Markets, the Elite Traders Conference, and the Traders Open Day. Welcome to the end of week market update here at Master the Markets, the update that we do at the end of every week, at the end of every trading week, to give you a summary and overview of what our performance has been like for that past week, and also to teach a new topic, to add some value to the community for the trading knowledge that we have acquired over cumulative experience of 40 plus years through the financial markets. So let us go straight into the topic of the day, which is all about using the ATR 10. So there are a lot of different uses for the indicator, the ATR 10, but before I talk about those, what I want to do specifically is I want to go over the way that the ATR 10 is constructed. So how is that indicator initially constructed? So why don't we take a look at that first of all. So let me grab my handy drawing tool just here, and we'll go over exactly how this is formulated. So with the ATR 10, you can see that the indicator here in the MetaTrader 4 environment is printed on the bottom of the screen, and you can see it's the blue line in essence, which is just trailing off here quite slowly, steadily, and consistently. Now, what exactly is it, and how is it actually constructed? So the ATR 10, first of all, stands for average true range. And then there's a number in brackets. In this case, it's 10, but we could change that. We could make that the ATR 3, or we could make that the ATR 7. Or we can change this number in essence. What this number is referencing is the number of bars that it is doing the analysis over. So where we have ATR 10 at the moment, this is looking at 10 bars worth of data. So that is the first important aspect of what the ATR 10 is doing. So if we wanted to change it, for example, if I right click here and I want to, let's just grab, there you go. So right click here and hit ATR 10 properties. I can change the period in this column just here. So I can make this period 3. If I wanted to make the line just a little bit thicker, a little bit more visible, I could do that as well. And now you can see at the bottom there, you have the ATR 3. So that is slightly changed the gradient of the overall line. I want to change that back to the ATR 10. And I'm just going to make that a thinner line. I'm going to make that a thinner line because here at Master of the Markets, we're not really referencing the line. I mean, that's not the important aspect of the indicator. What's important for us actually is the number that it is generating. So that's what we're paying attention to. And this number you can see here, if I hover my mouse over yesterday's bar, then you'll see that that number is 73. And what does that 73 derive from? Well, in essence, quite simple. What we're doing is we're taking 10 of the prior bars. So that yesterday's bar is bar number 10. And then so 9, 8, 7, 6, 5, 4, 3, 2, and 1. So it's taking these 10 bars, and what it's doing is it's gaining an average of the range. So remember, average true range. So it's gaining an average of the range. How does it gain an average of the range? Well, it does it like this. What it does is it takes the range of this bar just here, 1, 2, 3. So 1, 2, 3, 4, 5, 6, 7, 8, 9, and one before that there. So this bar's range may be 107, for example. From high to low, it's 107. This bar is 116. Then this bar here, it is going to be 78, it looks like. There is, so it's 78 pips. So you can see that I'm taking all of those bars, and what I'm doing is I'm adding the different ranges together. So example here is, what have we got? We've got 107, 116, 78. So 107, 116, 78, and we keep adding up the different ranges all the way up until we get to bar number 10's range, and that will be the last one. So we'll have 10 numbers here at the top. Then we'll divide those 10 numbers by 10 because we're looking at 10 bars. And what that will give us, simple mathematics, is that will give us the average of the range of the last 10 bars. So it will basically, in essence, if you think about it, it's giving us a marker of the average volatility in the market, because the high and the low of the bar is in essence what is denoting the amount of volatility that's existing in the market. So if we think about this a little bit, if we look at it, we can see that 10 bars ago, the ranges were a little bit larger than what they are now, relatively speaking, right? And so you can see that the ATR number is going down. That's denoted by the line. So you can see here the line was a little higher and it has dipped off just a little bit there. Now this is important for us because for several reasons, because we can now make use of this ATR10. One of the ways we can use the ATR10 is by using it to denote maximum trade risk parameter is one example. So in a lot of the Master the Market strategies, through the Master the Markets Live Trade Mentorship Advanced trading strategies, the Master the Markets Vedanta Elite trading strategies as well, they all use a maximum risk parameter, and we use a maximum risk parameter in our case on our strategies of 1.5 ATR10. Okay, and that's important. So what does that mean? So what we'll say is that, for example, we took a trade here on the pound dollar. Just yesterday, we took a trade long based on this first PSWB in this phase just here, which is the first interruption. And we took a trade on gold bars live long. But again, we use a maximum risk parameter. On this particular trade, on the pound dollar, we can actually have a look to see what the maximum trade risk was. So there is the trading journal, and you can see the maximum trade risk on the actual trade risk difference between entry and stop loss yesterday on that pound US dollar was 85 pips. So if I wanted to look at what 85 pips is in relation to the ATR, well, I can look at yesterday's ATR, which was 110. Okay, so yesterday's ATR 10, the reading, let's make a note of this, was 110. So let me rewrite that. So here, the ATR 10 was equal to 110. Okay, so what does that mean for us? It means that if we denote our maximum trade risk, okay, so trade risk, remember, is the difference between the entry and the stop loss. Okay, so entry minus stop loss. So we already said on the pound dollar that difference was 85 pips. Okay, so in essence for us that trade risk was 85 pips. Now if it was greater than, if the trade risk, so if the trade risk was greater than 110, then we wouldn't take the trade. But yesterday the trade risk was 85, and so it was still a valid trade to take. Sorry, I should let me just reword that actually. Not if the trade risk was greater than 110. If the trade risk was greater than 1.5 ATR10, right? So let me write that here. So 1.5 ATR10. So we know that the 1 ATR10 is actually 110. So how much is 1.5 ATR10? So 1.5 ATR10 is 165. Okay, so 165. So if the trade risk is greater than 165 pips, then we won't get involved in the trade opportunity. Yesterday, you can see that the trade risk on the pound dollar was actually only 85 pips. And because it's less than 1.5 ATR10, it fits our maximum trade risk criteria. So that's what the ATR10 is. That's one of the uses for it as well. Let's do a quick summary and roundup of the trading that we've done for the week so far. So on the live trading room, we had a couple of trade opportunities that have closed out this week. So we had a couple of trades on the primary runners trading strategy that have closed for profit. One of those was the pound US dollar, where we entered on the high of this primary just here. And then you can see we closed half of the position just there. Another half of the position is actually still running, and it's in floating profit at the moment. That hasn't banked out yet. We have a target set in place for that, which we did come close to. I believe it's around about the 125.60 region. So we are around 110 pips away from that, which actually interestingly is 1 ATR. So we are about 1 ATR away from that target at the moment. So we'll continue to hold that. We've trailed the stop to minimize any downside on that opportunity as well. We also banked profit on the dollar Japanese yen trade opportunity that set itself up here as well. So we actually entered the dollar Japanese yen market on the Friday just there. So you can see that green line was our entry. Our stop order was here. And you can see again, we banked half of the position just there. The other half of the position actually hit its target. No, sorry, the other half of the position didn't hit its target. The other half of the position actually came down and we actually closed ourselves out for a contained loss on the close of this outsider bar. So that made just a small profit for us. It wasn't anything to shout home about. But it was a profit nonetheless, which is good. So prior run has actually finished up this week 0.65%. Cash in 4.0, slight losing week on cash in 4.0. We took a few losing trades and winning trades. So minus 0.64% on cash in 4.0. So obviously just 0.1% up this week for the live trading room. So not a huge profit by any means, and hence the title of this update, small profit. So pretty much break even. On the Vedanta Elite Room, we haven't actually banked any trades this week. So it looks to me like we have still got open trades running, which are running across a few different currencies. So we are on the dollar yen, and we are actually running a new strategy in the Elite Room, which is called the Prime Runners Elite strategy, which is a more aggressive bar pattern strategy, less parameters involved than any of the other Elite strategies, so much higher frequency. And so you can be on the lookout for that. We'll have some results for that shortly. But none of those trades have actually banked for profit or loss yet. So we are still running those opportunities at the moment. In essence, on the Elite Room, we don't have anything new in terms of P&L, so it's just finishing as a small profit for this week. Just looking at some of the key markets this week, so Eurodollar, these markets for the last few weeks have really been ranging a little bit. So there is a lot of after this huge move we saw here, where we had a ranging market for a while and then a large move, again we're seeing a slight consolidation taking place. It's quite challenging to trade in these different market circumstances like this, and you do need a very, very robust trading strategy, which actually the trading strategies that Master the Markets are providing us with, and that's why we've even finished a week like this where the market is sideways, still at break even, which is a very, very good position to be. Dollar Swiss franc, it's the same, still ranging market. The pound dollar is making a little bit of an upside move. This is where we've made our money this particular week. Dollar Japanese yen, again, it's not really doing too much. We're running a trade long on gold bars live on the live trading room at the moment. We are long on the dollar yen based on this first PSWB. So be on the lookout for that. Aussie dollar, again, nothing happening there. Euro yen, yeah, again, this has made an upside move. We did take a loss on this cash in 4.0 trade opportunity here. We did get a little unlucky on that one where that seller bar did spike us out, but that's just the nature of it. And again, even bearing that in mind, we still finished the week net up. The oil market again is also ranging as well. What we're looking for on the oil market, one level that I will be on the lookout for is this one just here. So you can see actually into the end of last week, this is very important because this close of this bar, we filled this gap. So this close of this bar, which was 41.56, was actually met by this particular bar just here, 41.61. So you can see that after a very long period of time, that gap has now closed. And so what we're now looking for really is a confirmed swing high in the market, and that will allow us to get involved with a cash-in opportunity short. Dollar index as well, another market that we look at on the cash-in 4.0 elite. Again, we're waiting for a confirmed swing high on this one. Much similar to the euro dollar, dollar Swiss, we're seeing a ranging market here at the moment. So waiting for that to end just there, waiting for a new confirmed swing high. Once we get that, we'll look to get involved short. So not too much going on this week on the market. Couple of trade opportunities, finishing the week net flat or just a small profit. So that leads us into next week. Wish you all a really great weekend ahead. And until the next time, stay disciplined, follow your trading plan, keep trading like a master. Bye for now.